What's up, guys? Hope everyone is doing well. In this video I'm going to be going over a number of things. I'm going to be touching on some updates for Bitcoin. I'm also going to go over some more intricate and detailed analysis of the various stock indices such as this New York Stock Exchange, SPX, and also the Nasdaq with respect to the market crashing, which you'll see an image appearing on your screen now of an article on Twitter on October 7th going over how it's pretty much confirmed that we are definitely going to see a very bad crash, and it's quite actually interesting. Once you take a look at the charts, it makes perfect sense that we will be seeing that. But outside of that, here on the 15-minute chart, what to take away from here is, as you can see, ever since we came down ultimately from 25,000, we hit a consolidation point here to the left of this chart, and then we hit an intermediary, just a local intermediate high right here at around 22.8, and we come down to right here, here at 18.2. And this so far has been our lowest local bottom that we've set. If you then take the VPR, the volume profile range, from this bottom up to the current high, this local high we made right here with respect to this M pattern, this bullish M pattern, right here kind of conveys that there is, whether or not it's going to break towards the upside or the downside, the bias, or my bias personally, is it will break towards the upside, and also the charts just tend to be looking like that with respect to the lower time frames and the higher time frames. But right here is kind of just the confluence area for a reversal point, some sort of resolution to be made. So far we have come down and hit the pattern of this overall target. I posted on Twitter yesterday this symmetrical triangle that you can see right here, and said it would likely break down towards the downside. It's done that so far. So far we have seen, it was an approximate, it didn't hit it perfectly, but we did see a bottom, pink vector candle being printed with respect to the RSI getting rather oversold. So far we have reversed from that point. We did see a yellow vector candle being printed, so either that's going to be a good thing and we'll continue to see this momentum, or this will more indicate some sort of a local top and we'll actually come back down, perhaps test this relative bottom again, or we will go even further. Right now here on the higher time frame, when you take a look at that here on the 8-hour, so we are zoomed in right here on the 15-minute to the left. You can see here, actually, if I go back to the 15-minute, you can see once I zoom back out, see how the RSI has slowly kind of built itself up. We're also getting a bullish divergence with respect to, if you take a look at this low, then you go to this low right here, the stock RSI had a opposite correlation. And we're also starting to see us gain more upper ground towards this high area right here. You can see it was kind of similar back here. If you go towards the left of this RSI, we were kind of coming up from the bottom before we did have this bounce towards the upside for this M pattern. We had to gain this upper ground for the stock RSI, so hopefully you could see something similar to that right there. But back to this 8-hour chart, again we are seeing price kind of form in a rather symmetrical looking formation. The stock RSI also looks like that as well. It's also kind of hinting at some more bullish divergences with respect to how the price is. Right here it's kind of more, price is more angled towards the downside, whereas the stock RSI is more angled towards the upside. Just a minor thing, although it is good to see the stock RSI starting to gain this upper ground, kind of similar to how we did back here. We did see this minor bounce from this lowest low so far towards around 25,000. But if we also do the same thing again here with our VPR, the volume profile range, from this bottom, our all-time bottom so far, from the 69,000 within this phase, then we take it up to 25,000. That again puts the most confluence area of some sort of resolution being found again within the same area that we have been trading in ever since September 6th. We saw this minor bounce out of it, we hit this other confluence area, and then we've come right back down into it, and we've been trading sideways within it rather nicely. And again, things are looking more towards the upside as right now, but again, anything could happen. If we do end up going towards the downside here on the 2-day, again, as I've been saying for quite some time, the next price targets are 16 to 14,000, if lower 12 to around 10,000. If we do see 10,000, it's likely to be some wicks. We will see those lowest wicks similar to how we did back here for 17.5 thousand to 10,000. But again, if we do break up, given that's how things are tending to look, again, as I've already gone over, we're getting a bullish divergence on the RSI, the stock RSI, and the MACD here on the 2-daily with respect to our current bottom right here at this pink arrow. That's also just a smaller W within this larger W that we're seeing as with respect to this M pattern right here. Again, we should hopefully reverse towards the upside. We need to really, once we confirm breaking 20,000, that will likely be pretty much a solidifying factor. I would go as far to say, obviously once we break 25,000, that's definitely going to consider not consider, but conclude that this W is going to end up actually playing out. We're not going to break towards the downside. But again, that will take us towards the all-time highs of approximately 242,000 sometime during the second half of next year. Looking at it with respect to how it behaved within this phase, it could happen more specifically around August of next year. If we actually do end up getting this break towards the upside, assuming that it will do this, if you actually take a look right here, you'll see kind of a cup and handle forming right here as well with respect to this upside. If we do get this formed, the breakout target for that does happen to nicely line up. If we take the average between both of these bottoms right here for this W, and also just kind of take the average high with respect to our two highs right here, we'll see if we take it to the breakout point for the cup and handle pattern that it does nicely line up with going to around 240,000 or so. It takes us all the way up to around 240,000. So hopefully that does end up playing out if we do indeed break towards the upside. That's also the same target price for this M pattern as well. If you were to take the heights basically from D to A and then just double that, I mean, it's pretty much the same thing. They play into each other in terms of looking at it in terms of a pattern. But here on the weekly for Bitcoin, again, if we take a VPR, if we do it right here, so if we go back to the beforehand phase 3 leading into the high of 2018, this percent change from the beginning of this tool up to the top is around 550 or so percent. Did the same thing right here for the latter half of the parabolic run we saw. It's pretty much around the same thing, 538 to 550 percent. So if you do that, take the volume profile range, it nicely lined up with the low right here for this bottom and also with this lowest wick. Did the same thing right here. It's also nicely finding the most confluence for a resolution for a reversal to be found towards the upside. There is a pretty high confluence down here for around 12 to 10,000, but odds are it won't do that. If I had to guess, I mean, we technically haven't even really broken into the previous all-time high. If you take a look here on the weekly, we're only touching wicks really, and we haven't even touched the candle where it closed the candle at around 17.1. We maybe have wicked down there on some charts, but I mean, realistically, we haven't even really broke the previous cycle high. So I mean, there's actually really nothing to even worry about that. But if you take a look here, also it's showing very nice harmonic structure. We can see here, starting from this bottom in 2019, we have a 1, 2, 3, 4, 5, so it's overall just an impulse pattern. You can see between for the bearish parts from 1 to 2 and then 3 to 4, it's having the same similar structure. We see an initial downside when we have an M pattern correction, which is going to be a bullish. You buy the bottom where the D is going to be, and then you take this parabolic run all the way upwards. So we could technically, according to this, see a very similar run with respect to the 2 to 3. Same thing again, like I said, 4 to 5. Again, taking us towards around approximately $250,000. That lines up with the 1.444 here on this Fibonacci retracement with respect to the bottom right here for this current cycle to the average of the two highs of 65 and 69,000. And also right now for this risk to reward in terms of buying right now, it's more of a risk, and I talked about this on my Twitter. If you want to go check those out, my Twitter will be in the description of this video. But the risk to reward ratio, it's really you're taking more risk in not buying Bitcoin right now than you are in buying Bitcoin, because the downside right now from where we are currently is only 42%, where the upside is around 1,100 to 1,200%, could possibly extend up to 1,400% if it wants to push upwards towards around 280 to 300,000. But also outside of that, in terms of the total drop from where we were at 69,000 down to where we are currently, that was 74%, as you can see right here. If we actually go down to as low as we possibly could go, I don't think anything under 10,000 is really even viable to entertain. So if we go down to around 11.5 or 11.7 or so, that's around 83-84%. So I mean, we're looking at a mere in total 9% difference. So I don't really think that's much to be waiting for. Especially when, again, like I said, the risk to reward, I mean, there's more upside to be looking at here. So I mean, you may as well just at least put in some of a position right now, and then put in more if it does indeed drop to the downside. But also, if you take a look at the RSIs and whatnot, indicators, they're also bottomed out and they're coiling up towards the upside. So again, that's just another good thing to see. Here for Litecoin, if we look at this dotted red trend line, you can see we're hitting pretty macro support right now, so that's a good thing to see. Again, we're going to see a similar situation with all these indicators. The macro structure in terms of the harmonics is pretty much the same as Bitcoin, as I've gone over multiple videos in the past. If you actually were to go and look at it, you can see the same M right here for the Bitcoin. If you go look at Litecoin, you'll see that M right here as well. It's pretty much going to be during the same time as well. You see this overall larger W right here as well, which if you go and take a back look at Bitcoin, that would be this larger W right here leading towards 65,000. We are also coming down and hitting the 328, so another golden pocket range. If you actually were to take Fibonacci retracements and do the reverse of them, you'll understand that the 382 and the 618 are pretty much the same retracement, and they're kind of like a dual golden pocket. So this is a very good place to find a reversal at. We're also again making a similar W, kind of similar to how we did back here for this bottom, which is, again, it's just pretty much ultimately what Bitcoin is doing. Litecoin's seeing a sideways structure, which isn't really good. It's probably gonna, if I had to guess, maybe it'll either continue this sideways structure over a longer period of time, or it will continue at some point to actually start drooping down and having an overall negative structure, which doesn't mean you can't make money off of it. It just means that it's not going to have crazy returns like a lot of other things that are more prosperous. But again, if you take a look at the volume, the VPR from this bottom right here in 2018, all the way to where we are currently with respect to the highest high we've set, that does find also support confluence where we are right now for a bounce. If we take an even more, a larger one, a more macro VPR from this bottom down here, again, all due respect to where we are right now in time, up to the highest highs, that puts another confluence area kind of in the ballpark where we are right now for a bounce. It does put one right here at around $10 if we were to go lower. There's not really any price in terms of how the price looks in the past to really corroborate that, in my opinion. But again, in general, I just don't think it will even go down to $10. If it were to go down, assuming Bitcoin went to the 16, 14,000 or 12 to 10,000, we would see it probably go down to as low as the previous lows set at around like $25 or so. But assuming we do get a Bitcoin, or not a Bitcoin, reversal here in the market just in general, Litecoin could reasonably push around $800, $700 to $1,000 most reasonably. It could actually, if it wants to extend quite a lot for whatever reason, it could push as high, I think, again, reasonably up to around 3,700. But just in general, it could just test its all-time high again because it kind of seems to be deadening out, so that's always a possibility to look out for. But again, in general, likely around 700 to 1,000, again, just similar to Bitcoin around second half of next year, perhaps August, September, maybe October, if it wants to bleed past and lag behind, since a lot of altcoins tend to do that. But here for the New York Stock Exchange, I already went over pretty much all these indices in my previous video, but I've looked at a little bit more, found some more interesting things. So if you actually take a price in terms of the percentage change and the change in time with respect to both of these macro M patterns we've seen starting from 1994, you see that they are both pretty much 300% approximately. Right here and right here, they're also pretty much the exact same time, 154 bars. So that's also another interesting thing to see. If we actually go to our two bottom right here for both of these, we go 53%. This one took 12 bars. We go up 53% on the dot, 42%. This one took pretty much double that length. And you'll also start to see another interesting thing is obviously they went up the same percent. The first one was half of the second one, but then you'll see there was in total, if we start from right here and we go down, which I'll do a path for it, we start right here, so we have 1, 2, 3, 4, 5, and then 6 for the all-time high. If we do that same thing right here, we have 1, 2, 3, 4, 5, and then 6 for the all-time high. So, and then it led into this terrible crash that we're seeing. So that's there's a lot of things pointing in this. Also, I mean, like I said earlier, the UN has pretty much confirmed that we will see it. It's very obvious in the charts that we're most likely going to see it. I mean, if you take the indicators, take a look at the indicators, it's likely to see that. I mean, the stock RSI and a macro, the monthly right here, just finally crossed over towards the lower half of the stock RSI. We still have room to go down on the RSI. The MACD got rejected recently. So odds are we'll continue to go down, in my opinion. Again, perhaps we could see a bounce. Maybe we're not going to be exactly how this March or this 2008 crash was right here. And it could be worse. If it is exactly like it and going down to this 328 right here, we would go around to around 6,700, 6,600. If it just went to around the 618 right here, it would go to around 8,500. But I mean, like I said, if it's worse, who knows how low it's actually going to go. I mean, maybe it goes below this low down here of 2,500 and completely breaks this overall two-base structure of these M patterns that we've seen so far. I mean, eventually, like I've been speaking about in my videos, there's going to have to be a decoupling, and the traditional markets and these indices and whatnot are, if I had to guess, are going to like completely be wiped off the table. I mean, we might, if I had to guess, and I've had ideas of my own, that I mean, you can literally just translate the data that is the traditional stock markets over into cryptographic placeholders. So I mean, basically, you can just see, like, you can invest into the New York Stock Exchange or various things on the Wall Street market, but it has a cryptographic placeholder instead of it actually being in terms of like traditionalized market structures and things like that. But not to get off on a tangent, that's pretty much what I wanted to go over for here. Again, we are seeing it again with a period of 7 years, just about from 1999, when we go to, or 2000, then 2007, then we go 2014, then we 2021, so we're pretty much just due for a crash. Here on this, what I wanted to point out, which I haven't already pointed out here, is if you see, take a look right here, which I guess I'll need to zoom into it. You can see, taking a look at this red pattern, you see we have a W, we have a second W right here, and then we have a lightning bolt right here, and then a W, and then another lightning bolt. Let's see, if we take a look here at the SPX, again we'll see a similar structure. The New York Stock Exchange, kind of, I just use that as like for all of the indices. If the stock exchange, in my opinion, is going to crash, they probably all are going to crash, because they all kind of just look the same on the macro context anyway. But again, looking at this red pattern, so you see a W, second W, then we have a lightning bolt, and then a second W, and then another lightning bolt. See, literally the exact same structure and formation. And then if we go here to the Nasdaq, here on the larger time frames, again, I've already pointed out, very nice ABCD pattern. It could go lower than this, especially if it's going to crash even worse than it ever has. But again, we'll see the same structure here from our current highs we've set so far. We'll see the W, second W, lightning bolt, then we have another W, and then another lightning bolt, or the lightning bolts could just be ABCD patterns or ABC patterns. So really, as I've already pointed out, things are likely going down. I've already pointed out the DXY, we're having a triple bearish divergence. Odds are this will continue to see a downtrend as well, like most of these, as I believe Bitcoin will eventually see some upside. Again, I don't think it will break towards the downside. Things are leaning towards the upside. So I expect we'll probably start to see the early inklings of some sort of a decoupling coming with respect to blockchain alternatives in terms of replacing the old and already accepted and known traditional markets. But that was about all that I wanted to go over and touch on in this video. Hopefully you guys enjoyed, and I hope you all have a blessed day.